Hello everyone and welcome to our live event, the culmination of our Path to COP26 programme. We've called it COP26 and the Corporate World, Changing with the Climate. I'm Jeff Twentyman, Head of Sustainability here at Slaughter & May. In little under a month, the COP26 United Nations Climate Conference will start with over 200 nations gathering physically or virtually in Glasgow to pledge new carbon reduction targets. Alok Sharma only yesterday wrote to all parties to the United Nations Framework Convention to identify priorities and outcomes to include addressing the gap between nationally determined contributions and the required emissions reductions, and meeting the $100 billion goal for climate finance to developing countries, and more generally to implore every effort is made not to disappoint. COP26 is of course an event from which tangible outcomes are keenly anticipated, but it also has a symbolic significance. We are facing simultaneous global risks, geopolitical competition, demographic imbalances and widespread inequality, political upheaval and economic dislocation, technological disruption, and of course, climate change, all at the same time. And so our collective ability to come together and agree upon a multilateral common approach to the greatest and gravest disruptor of them all has huge significance for all of us. There can be no doubt that COP26 has the potential to have a significant impact on the global economy and of course on the businesses that operate within it. Climate change is both the biggest and most pressing risk facing business. It's high probability and high impact. It's truly visible in the short, medium and long term. It is not a contingency. It requires deep and broad rethinking and transformation. It also presents, and it's perhaps trite to call it opportunity, except perhaps in the sense of out of adversity there is opportunity, but a significant rebalancing or redistribution moment within our economy, which will bring great opportunity to some and great adversity to others. So one thing is abundantly clear: for businesses, as for governments and as for society, the recent past's history of incrementalism has no secure moral or legal or economic foundation. Delay is the new denial. The near-term future requires fundamental change to the way business operate, and this requires courage in decision-making, arguably a new approach to governance. And we need boards that are both climate and future competent, with a diversity of experience and an appetite for innovation above and beyond what is the established norm. So this is, let's say, an exciting time. More is expected and needed of business management than ever before. So if you wonder how you came to be participating in a law firm's event focusing on an international climate change treaty, this is why. We are, as the Secretary General of the United Nations has said, code red. The business world will have to reshape and transform itself to contribute to the broader interests of people, planet and profit. We intend to support our clients on this transformation journey, and I can't think of a more important or more pressing discussion to be having this afternoon. Our programme is in two parts, and true to our law firm instincts, part one comes with part 1A, when I'll have a conversation with Julie Brown from Burberry, and after a short interval, part 1B, when I will speak to Rosemary Martin from Vodafone. And then another quick break with some expert sessions available through the platform. And then on to part two, our panel event to be moderated by Claire Jeffs. In an area where there is a lot of talk, we really want to show you sustainability in action and in person. And I think to try to explore the scale of the task. I hope it's going to be interesting. I'm sure it's going to be challenging. It's possibly going to be bracing. Turning now to a business that has already started and made great progress on its transformation, I'm joined by our first guest, Julie Brown. Julie is Chief Operating Officer and Chief Financial Officer at Burberry. She's the Audit Chair at Roche, and she's joining us virtually. Good afternoon, Julie. Thank you so much for joining us today.
Good afternoon, Jeff. Nice to speak to you.
Nice to see you again. Julie, you speak quite a lot on the subject of business sustainability, and of course you're a co-chair of the Prince's Accounting for Sustainability Projects CFO Leadership Network. So my sense is that this is a subject that you feel very strongly about. And how have you come to that sense of its importance?
Yes, I mean, I thought your introduction was great, actually. I do feel very strongly about this. I think that climate change is not just an environmental risk, but it's a social and an economic risk as well. And it's impacting millions across the world even today. I mean, we see it ourselves. And I first became interested in it when I was reading about it and looking into the impact of climate change on the world around us. If we do raise temperatures by just 1.5 degrees or even 2 degrees. I also think as a company with Burberry, and Thomas Burberry's legacy 150 years ago, nature and the great outdoors really drove us to feel that this was important and to get behind this as a company. So we're enthusiastic for the natural environment, and our colleagues all over the world want to make a real difference. And we see in Burberry that actually to make our operations sustainable and make our supply chain resilient is non-negotiable. It's very, very important.
We're going to come on to talk about supply chain shortly, but so how have you seen your role, which is obviously a combined role, evolve as sustainability has sort of come to the fore in recent years?
Well, I think in my role, I mean, one of the things we need to do is look at the business and how it's going to develop, many years from now, but also understand the risks that the business faces and how to mitigate those risks. And as you say, climate change is now one of the biggest risks facing business, people, economies. And one of the ways in which the two areas are closely aligned is that we've recently been doing reporting under TCFD, so looking at the impacts of climate change on our business and basically our raw material supply chain. And therefore I work so closely with the responsibility team. As you know, we were also involved in a bond recently. So the connection between climate change, sustainability and finance is now incredibly tight, probably the tightest it's been for many years, and certainly through my career.
And I mentioned in my introduction the idea of future and climate competent boards. Do you see sustainability now as a sort of a necessary aspect of the senior executive role?
I do, absolutely. I think the environment's changed. I think people generally now in whatever sector are realizing this is an emergency and are taking it extremely seriously. And I think boards generally, I'm involved with a number of boards, they're all very interested in this. Likewise, shareholders that I speak to, this has been raised in the agenda, and together with employees and colleagues generally. So I think it is an area that's going to be, and is already, extremely important for our board, and actually both the boards I'm involved with. It's a major topic on the agenda.
One of the things you hear sometimes people talking about is this idea of trade-offs, and I'm not going to ask you about whether trade-offs exist, but that's a whole other subject. But you can see a situation where the role of being, if you like, the financial gatekeeper in an organisation, but also having responsibility for sustainability puts you in a difficult position. I mean, how do you see that happening, or in fact, do you see the two things as being aligned?
Yeah, I actually do see them as being aligned. I mean, I think that if you take a long-term view with this, the worst thing you can do is not invest in a sustainable future, because that puts your business at risk. So there are some things that we're embarking on. As you know, we've set out our ambition to be climate positive by 2040. So there are some things that do cost more. And likewise, when we did the bond, we had to use the proceeds in a certain way. So investment is required, whether it's in architecture, buildings, the raw material supply chain, additional investment is required. But it's for the long-term benefit, as you said, for the people, for planet, and profit. So we see it as an investment for good. We see it as an essential investment indeed, rather than a nice to have. So there's no real conflict, I would say. Whenever we talk about sustainability initiatives, they're always very high on the agenda in terms of resource allocation, positively.
Good. You mentioned a couple of things we should come on to. In the height of the pandemic last summer, you launched your first or maiden bond, which you did with a sustainability framework alongside it, and it was massively oversubscribed. And why did you decide to go down that route?
Yeah, it was, for me, it was just like, it was the thing we had to do. We decided, obviously through the pandemic, we decided to raise external funding by way of a bond. And it was actually Burberry's first bond in the market. And we decided to make it a sustainability bond because we wanted it to stand for our purpose. We wanted it to mean something to the organisation. And I found it was actually a catalyst for multiple functions working together, because normally if you do a bond, it's normally the domain of, the finance department. But as it was, because we did a sustainability bond, it involved the responsibility team, our architecture team, because buildings were a key part of this to BREEAM and LEED standards. We also involved the commercial organisation. Packaging was changed, so the retail organisation, the supply chain. And so it was a completely cohesive effort across the organisation to be able to launch the bond. And we probably had, I would say, about probably 30 to 40% of the questions were sustainability related, which again, you never usually get when you're launching a bond. And as you know, and your organisation were instrumental in supporting us, so thank you very much for that. We were oversubscribed by 8 times. It was a real success.
And I mean, you mentioned there that the sort of breaking down of silos, sort of operating silos within the business, but has it also changed the conversations outside of beyond your colleagues and in the outside world?
Absolutely. I mean, I think sustainability is now arising in the vast majority of investor interactions that I have in every major city. And also the bond, I think, gave us an opportunity to again raise awareness around what we were doing in Burberry, around being climate positive. And so I think there's now a much better understanding, I think, of what our ambition is, what the roadmap is to get there, what a difference we can make, not only just in our own organisation, but in our wider extended supply chain. So we've increased our target for Scope 3 emissions to reduce them now from 30% now to 46%. So we've increased the stakes. And we've also engaged in industry associations like the Fashion Pact, for example. Together with my work with the Prince's Trust and A4S, we also engage with multiple industries to share best practice and make change happen by having a broader reach. So yes, it comes from us, but it's also engaged a wide range of stakeholders.
Actually, hearing you speak there, it sounded very much like you were describing a purpose, actually. I mean, it's a sort of a common objective, so it sort of supports that corporate purpose.
Absolutely. I think there's a really, there's a growing awareness of the issues, and I think there's a growing need now for people to work together. And last week I was doing a panel at the Shard, with Derwent, one of our landlords. And there's a real need for people to work together to make this happen. And I've never really felt that energy before to the degree I do now.
You mentioned your climate positive aspiration by 2040, and you've also set yourself a very demanding aspiration for traceability of all key materials by 2025. I mean, how did you go about formulating those aspirations, and how are you planning to achieve them?
Yes, I mean, it does start, I think, with Thomas Burberry's legacy. So he was always in favour of supporting the environment and supporting communities. And we've actually, one of our passions has always been to be a force for good in the world. And we've now had environmental and social programs for about 20 years in Burberry. But we decided to make a step change this year by saying we're going to be climate positive by 2040. And that involved, in terms of how we're going to achieve it, it involved looking at how we could go beyond net zero. So we're now investing in helping to protect and regenerate natural ecosystems, but also support the local communities beyond our own business. So we've set up a Burberry Regeneration Fund, which was set up last year, and this is involved in, carbon offsetting and insetting projects. So examples would be compensating and storing carbon, promoting biodiversity, facilitating the restoration of ecosystems, and also, as I mentioned, supporting the livelihoods of people who work with us on the front line. A great example recently is Australia with wool production. And as I mentioned, what we're finding is that by engaging that wider supply chain and having an even more ambitious target of minus 46% by 2030, again, that gets traction, and it means you're leading from the top and you're doing something that will make a difference.
And some of those biodiversity examples you gave there sort of piqued my interest. And do you select those, if you like, because by doing them they contribute to the business, or are they really as offsets for your impacts? I mean, how connected are they to your business to do those things?
Yes, they are very connected to the business. So we select them on the basis of what is relevant to our business. So because we've got production in various countries, or we're using raw materials from various countries, if we can do biodiversity offsets in those same communities, then there's a direct link. It sort of links with the overall program. So yes, that is one of the definite criteria that we use.
Right. Okay. So I mean, I think you've touched on this a little bit, but I mean, what practically needs to change in business to sort of accelerate delivery of net zero?
I think the first thing is to embrace. It's not an initiative anymore. It's just a way of doing business. But to embrace it, to realise the implications if we don't, and to embrace it. I think success also is very much determined by leadership from the top. So I think you've got to, as a board, you mentioned the board earlier, you've got to be really committed to this at the board level and the CEO level. So our CEO runs a sustainability steering group that a number of the executive team are members of, and that's an important sign from the top of the organisation. I think you need to set very clear targets, ambitious targets, and don't be afraid of setting an ambitious target without having a total roadmap about how to get there. So this was one of the learnings for ourselves as well. And then work out the roadmap about how you're going to get there. And then the other thing we've done is we've had a number of these touch points in the organisation that support the overall mission. The sustainability bond was one example, joining the Fashion Pact and supporting this Italian manufacturer, causing them to work in a different way. It all means something to the organisation. And then what we've also done is we've engaged employees in this. So we've got, responsibility champions in our retail stores that are looking at waste, electricity utilisation, etc. So it comes now from all levels in the organisation.
And obviously, a lot of sustainability is about mitigating impacts, but we shouldn't lose sight of the fact that does also present opportunities. So, how have you gone about making sure that the opportunities are properly visualised and attacked, if you like?
Yes, I think, the first thing we did was we looked at, where do our emissions come from? What causes the issue? Whether it's the raw materials, whether it's the supply chain, whether it's the buildings, or air travel or freight, etc. We looked at the sources of the issues, and the best solution is always to capture those at source. So rather than trying to offset them, address them from the very beginning, of the issue. So we got into that, and that's why we've made some of the decisions we have around raw material traceability, for example, or packaging, recyclable packaging. So to try to trap it from the very, very beginning. And that's essentially what we've done. And that's led to, the roadmap we've got now to make a difference. And going forward, we've divided our targets into, we've got an ambition by 2040, but we've got targets for the next 5 years, the 5 years beyond that, and then the 10 years beyond that. So it's kind of broken down into steps.
Yeah. You started to talk a little bit about your board. I just want to dwell on that a little bit. I mean, how have you found, and how's the board found the shift, if you like, from a sort of a shareholders first model to a more, balanced multi-stakeholder view? And has that affected decision making at Burberry?
Yes, it's interesting actually that we started with our board papers on the front page explaining whether this impacts, the profitability of the company, the employees, or the planet. So the angle, the lens on board papers or board decisions has now changed to be multifactorial. And I think that the majority of board members will also have this on other boards, that there is this, I guess, a groundswell of opinion now in favour of this. So that the number of times this would be on the agenda, the level of granularity of the debate, the choices we make, the support for investment. I think the appreciation, climate change is one of our most significant risks on the risk register, and therefore it's automatically in front of the board as one of our major risks. And then we would be looking at the impact on climate change on all of the supply of our raw materials and looking to mitigate that. So it's very integrated with the business. And I think the board actually, I think most participants enjoy that wider perspective. I think everyone around the table appreciates that a company is a lot more than driving profit. And that's really coming to the fore right now.
Yeah. And so in particular, it's not a sort of a niche subject, but it covers everything. And I think the decisions that boards are required to make in relation to climate change and around net zero are a bit different from many other decisions, because the consequences or the way in which climate change will impact are much less certain, and the consequences of your actions are less certain, and the horizon is much less clear than is typically the case for a capital allocation decision.
Yeah.
So has that required you to change the way you support the board in helping them make those decisions?
Yes, I mean, you're right in terms of the timeframes involved in the decisions are a lot longer. I think this is probably where intermediate milestones actually help you. So we said, we've got an ambition to be climate positive, but we said, for example, by next year, we'll be climate neutral in our own operations. And so we now, this year, up to 93%, minus 93%. So it kind of gives you targets along the way. And I think that's important for a management team, and it's important for a board, because then you can see the progress around those objectives, using renewable electricity, for example. This is another target that we're measuring on a continuous basis. So I would say, encourage other companies, I'm sure they're doing this already, to have intermediate targets.
Yeah.
It's a nearer term for the current management. I think this is one of the reasons why we've got the ambition by 2040, but knowing what we are going to be doing in the next 5 years is actually an important thing for usually for management teams and boards. Similarly, the next 10 years is an important metric. It's also tied in with, the ED's remuneration. So you're looking at it on an ongoing basis.
Right. Okay. And you mentioned briefly investors, but have you found that your investors are supportive of the idea that long-term sustainability and resilience is consistent with the best financial outcomes?
Yes, absolutely. I think investors are very, very active now in this space. I mean, you know, ESG funds are the fastest growing part of the market. And investors are now asking questions about this. And I think it's probably a combination of just general awareness, but it's also the view that if you haven't got a sustainable business, you haven't got a business. So I think it's you just know now that you've got to make sure that you've got your supply chain sorted out, you've actually got harmony across your main suppliers and that you're all working to the same agenda. And I think shareholders really, really understand that and now are pushing that from their own angle too, which is very important.
Yeah. Julie, we've got a few more minutes. I've got two more questions for you. One is a more specific one, but you're going to be reporting against TCFD again next year. And how are you thinking about the sort of increasing demand for narrative or sort of pre-financial reporting, and what do you think needs to change most importantly in corporate reporting? And obviously you've got a good insight from your work with the Accounting for Sustainability here.
Yeah. Yes, I think with regard to this, I think the reporting has grown up with multiple agencies, and therefore you've got very significant deviations in the way companies are reporting at the moment, and there have been concerns about greenwashing, etc. So I think it is important to set, have a common set of what you might call minimum standards. And I've realised through my work with the Prince's Trust and other industries, it's not so simple, this, it's financial reporting. So I think there is a need for a set of minimum standards and a set of making sure people are progressing them. But I also think it's important to have industry specific standards, because the issues in oil and gas are very different, for example, to the issues in a luxury fashion company. So you've got to be able to have that flexibility as well. I think the other thing that is important to this reporting, I do think we should build on TCFD, by the way. So there's a discussion about IFRS taking some of the lead in this, and I do think we should build on the TCFD framework because it's a great framework and it in itself has raised companies' awareness around the risks of climate change. So I definitely think we should use and build on this foundation. I also think that we should make it more obvious, I guess, to customers, to engage customers, because customers are very interested in this area. And I think by making our key environmental and community programs more visible, again, it will raise the awareness of the customer base. And again, that will force change.
Yeah.
So, yeah.
Very last question, and you can be brief or long as you like. Do you think the business world appreciates the scale and speed of change that's going to be necessary in the coming years?
I think it's growing. I think it's growing. I mean, I really sense a change now. I sense a change with my colleagues in other businesses, the CFO network through the Prince's Trust. I sense a change with suppliers, our wider sort of ecosystem. I definitely sense that. And I also see with investor discussions that this is being raised in terms of the level of its importance. So I'm actually very optimistic now that change is happening, and there's a groundswell of opinion now that I think will really start to have companies comply a lot more seriously with the Paris Agreement. And I think that's really important for the future.
Thank you very much, Julie, and thank you for spending your time with us. It's clear that you and Burberry are taking this very seriously, and I'm sure our audience will have taken many things away from what you said. So thank you very much, Julie.
Thanks, Jeff. Nice to see you.